Ladies and gentlemen, welcome back to another Bitcoin update. Volume profile, bull market support band, and a Bitcoin on-chain chart. Those are the three main topics of this video. All three of them are very, very important. Two of them though, the bull market support band and the volume profile, link into each other quite well, and they give us a very well-rounded view of what needs to happen exactly for Bitcoin and when we need to see that happen by. Bitcoin is in danger right now, make no mistake. It's in a dangerous position. I wouldn't say it's bearish yet, but it's certainly getting there. And if we don't see a good close in 2 days in the weekly candle, we will be in a very bad position for Bitcoin and will be under a bit of a threat. So guys, without further ado, I'm going to be analyzing that, tell you exactly what you need to know. Let's get into it. Alright guys, the charts we'll be getting into today is the Bitcoin correlation chart first and foremost, which is actually quite a unique topic for this video because it's not quite related to the video topic in general, but it is something I want to discuss. It's Bitcoin's correlation to S&P 500, NASDAQ, just general traditional market assets, and how that has seen a resurgence and what it's been doing for the last year or so. We'll be discussing that more in tomorrow's video, but we're discussing it today first off the bat. I think you'll find it interesting. We then have the Bitcoin range-bound chart like usual. We then have the Bitcoin volume profile, looking into what that says about Bitcoin and how it's a more intricate version of analysis on Bitcoin, a more intricate version of the range-bound analysis chart, giving you exact levels that we need to stay above and below, not just 24.5k and 32k, but also 25.7k and 30k, and the critical dividing level at around 28k as per volume profile. We then have weekly chart on Bitcoin. This is probably the most pressing chart that Bitcoin has right now. We're at risk of forming something like we did in April 2022, which led to 9 red weekly candles in a row. We need to avoid doing that. We have 2 days to avoid that. Right now, it's not looking good, and we're going to look into that in a second. We then have a daily chart briefly, Ethereum chart briefly, potentially something forming on Ethereum could help Bitcoin out a little bit. Guys, I also want to say, go to my community homepage and click on the community tab. Alright, or my YouTube homepage, click on the community tab, and you'll see this post. Ask me questions about Bitcoin and crypto that you want me to answer in my next video. We've only got 7 comments. I want to answer these questions tomorrow. Go and post your question you might have about Bitcoin, crypto, the market in general, charts, whatever it may be, fundamentals, and I'll answer the question in tomorrow's video. Go and post a question there. Guys, before we get into the video, I want to quickly look at the VIP group. We've released our Q3 results. So we've got a PDF with every single trading plan result we've had. That's over a year of results now on there. We've got over like 120 something trades or something like that. And then we've got an 80.5% win rate. So go ahead and check out that free PDF document, see the results, and check out VIP group for yourself using this information results page. You can see the prices, what you'll get for the group, and also a 14-day free trial if you're interested. Guys, thank you in advance for watching the video. Let's get into it. Guys, let's get into the video without any further ado. I want to start the video by discussing something a little bit random, but I do think people need to know it. There has been a rapid resurgence in the correlation Bitcoin has to S&P 500 and other risk assets really in traditional markets in general. The correlation has rapidly advanced over the last kind of month or so, going up from like 20% to almost 35%. And this looks scary because obviously S&P and stuff like that don't look particularly good right now, but I want to make something known very close, not really, what's the word? I want to make something known, and what I want to make known is this. In order for something to be considered correlated, you have to see at least 33% correlation coefficient. Currently, we're below 35. We're at around 33%. So we're just entering the region of correlation, and that means we've got a very, very low correlation. And we've spent the last basically full year almost uncorrelated to traditional markets. So although we've seen a rapid resurgence in correlation, it still is a very, very, very low correlation. In fact, we've just entered the zone in which it can be linguistically called a correlation. So the correlation is still very, very low. It's not something to be very worried about right now. But it is interesting to see this chart and how irrelevant S&P action has been in relation to Bitcoin, and how even though it's been completely irrelevant, people have still focused so much on it. We still see videos all the time. Oh, S&P's got a new low, so Bitcoin is. It's like, based on what? Look at the correlation over the last year. It's been genuinely what is the word? By definition, it's been uncorrelated for a full year almost. So to act like somehow that has any basis in reality is ridiculous. Yeah, we've seen a resurgence now. We'll keep an eye on that. We'll discuss that in tomorrow's video a bit more, but I want to make you aware of that resurgence, and I also want to make you aware of the fact that that correlation's been irrelevant for quite a while now. But yes, there has been a resurgence. That's something we need to discuss tomorrow in a separate video topic. It deserves its own video. I will discuss that tomorrow. now we can get on with the actual Bitcoin content. Alright, so basically we discuss this in every video, the Bitcoin ranges. There's 3 distinctive Bitcoin ranges right now that have kind of been present throughout the last year or so, year and a half really. 18k to 15k, 18k to 24.5k, 24.5k to 32k. And that means that the critical range we're in now is between 32k and 24.5k. Therefore, if we break above 32k, we look very good, we enter the range above. And if we drop below 24.5k, we look quite bad, we're entering the range below. So that's kind of the analysis for Bitcoin in that regard. We do need to stay above 24.5k, and we do need to break above 32k in order for the bullishness to kind of remain on the macro. Now, right now, Bitcoin is in a bad position because we're in threat of forming something like a head and shoulders candlestick formation. We don't want to see that, because if we do see that, that means we have a clear measured move from a horizontal neckline, bringing us all the way down for a measured move target of around 17k. And so realistically, we can be logical and kind of say, well, that actually means that we'll see a target of the bottom of the orange range, which means if this head and shoulders candlestick formation activates, okay, that means a market pattern, I should say, activates, that means that Bitcoin is very likely to break down all the way to the bottom of the orange range and start testing that support zone. And if we lose that support zone, we enter the range in which we saw the Bitcoin bottom. And if we test the Bitcoin bottom again and to go below it, we lose the 4-year cycle and we lose the longest macro Bitcoin trend there has ever been. So Bitcoin is in a dangerous situation right now. That is for sure. We don't want to be seeing a drop below 24.5k. If we do drop below 24.5k, it's technically not the end of the world. But it would be threatening because, as I said, the measured move from that drop would take us all the way down to this region here, and we need to hold that, otherwise it would be the end of the world. That's quite a simple reality there. Now, I do want to quickly note, the head and shoulders market pattern isn't entirely valid. Generally, with head and shoulders market patterns, you want to see the left and right shoulder be of similar height and structure. They are not of similar height and structure. The right shoulder went up to 28k, the left shoulder went up to 31k, so technically they're not the same in terms of height and structure. You could say it's not necessarily a head and shoulders, but if I'm giving the bears the benefit of a doubt, I could say that this is a somewhat valid head and shoulders market pattern. So there are threats forming on Bitcoin in that regard. And we do want to see 24.5k holds, so that neckline does not break. And unfortunately, Bitcoin is not doing the ideal things right now. It's not. It's not the end of the world yet. We're still in a short-term upwards trend. We're still holding support. But overall, I mean, the stuff we've seen over the last few days is not ideal. And the last week is not really ideal at all. If you look at the volume profile on the screen right now, and you look at the red line that I've got on the screen with the volume profile, you can see that red line is the POC. What does that mean? It's the point of control. What is the point of control? The point of control is the zone in which we see the highest historical trading volume in relation to that price point, meaning there has been the highest amount of interest in the market, the highest amount of orders in the market at that price level, meaning if we're below it, it's very strong resistance, and if we're above it, it's very strong support. Right now, we are below it. We're below the POC. And not only are we below the POC, we also rejected from the POC 2 separate times that I just circled and went downwards from there. Not good at all. Now, luckily for us, we do still have pretty large spikes in volume on the volume profile below us, but once we lose something like 25.7k, and I'll mark it out for you right now, once we lose something like 25.7k, which is down here, and I'll make that a pink line, the volume profile falls apart. And there's really not much, historical buying, or not buying, there is buying, it's just there's not much historical interest in those price regions. Now, that works in our favor to a certain extent, because it means that when we've gone below 25.7k, all right, and we've gone below, and we've seen wicks and daily candles below there, very, small amount of them, it's been bought up very quickly, and hence it's been a very, very strong support zone. But there's only so many times you can do that before we lose buying pressure in that region, right? So the reason there's no volume in that region below 25.7k is because that's a point of bullish control. The bulls just buy it up so quickly that it goes upwards. There's no bearish selling pressure under 25.7k really. But as I said, there's only so many times you can hold a level before it breaks, and we've already held it for support on 2 separate major occasions. Generally speaking, triple bottoms, right? Triple bottoms, when you see the same level be tested on the downside 3 times and you still bounce, they're pretty rare. They don't happen very often. So, realistically, if we drop below 25.7k and we drop back below this pink line and we drop back into that major buying range, there's no guarantee at all that major buying range is going to hold up. And so 25.7k is very kind of important to hold, because if we drop below that again, as I said, there's no guarantee we'll hold that level again. And then it becomes likely that we drop below 24.5k, right? Which, as we said before, is the bottom of the range. And if we drop below that, we start activating the bear case that we highlighted before, right? Potential head and shoulders pattern breakdown targeting that orange line. So you can see how it's a slippery slope, and you can see how it gets rough pretty quickly as soon as we start losing something like 25.7k. Now, 25.7k is not actually far away. It's only about 1,100 USD away. So we really are under the pump for Bitcoin here. We really do have a lot of pressure on Bitcoin's shoulders. The same thing can be said about the upside, but the upside is further away. In the same way that, you know, holding 25.7k is important because it's the peak of the volume profile, and below that there's not much. You know, breaking above 30k is also important because the same logic applies. If we break above 30k, it becomes very likely that we'll see it, very unlikely that we'll see a triple top, and hence it becomes very likely we'll break above 32k, and hence it becomes very likely we'll break above the green range and get back into the territory we saw the vast majority of the bull market in. Now, look, I'm trying to articulate this in the best way I possibly can. I understand it's complicated. Unfortunately, it is just a complicated thing to articulate. If you didn't understand anything of what I just said, I'll explain it to you as simply as I possibly can. The critical levels on Bitcoin right now, on a literal basis, are 32k and 24.5k. But if we're being more precise and more particular and using TA to our advantage, we can actually see that the critical levels are 25.7k and 30k and 28k as per the POC. If we get above 28k, Bitcoin looks to be in a decent position. Until then, it doesn't. That's the simple reality. We're looking pretty rough on Bitcoin right now. Daily charts, there's not really much to say on the daily chart other than the same as what we just said before. We've seen a rejection and we're coming down. We've still got an upwards trend. We've still got a short-term upwards trend. Nothing is actually materialized properly yet, but we are under pressure. We are under threat quite massively. It's really the weekly chart where we can start to see a bit more and get a bit of a clearer lens as to what's going on from a longer term perspective. The weekly chart shows us something quite bad. It shows us that we've actually rejected from the bull market support band. Not only have we rejected from it, but we've seen a evening star candlestick formation playing out right now, where you see a massive green candle, a doji candle, and then a red candle. That's an evening star candlestick formation. It's a pattern of reversal. Right now we're in a small upwards trend, and we're seeing a pattern of reversal print here. Now we have 2 days left until the weekly candle closes, and in the next 2 days, if we manage to close within the bull market support band, that pattern of reversal is not confirmed. We do need to see that. Right now, it doesn't look very good. If we close right here, for example, Bitcoin's going to be pretty rough. So we've got 2 days to kind of make a move for Bitcoin. The bulls have to act now. We saw a similar pattern over here in 2022. In April, we saw an evening star candlestick formation with a green candle, a doji candle, and then a red candle. And it led to the peak of a major dead cat bounce that we saw, and it led to a very strong downwards trend where we saw 1, 2, 3, 4, 5, 6, 7, 8, 9 red weekly candles in a row. So you can see how these bearish evening star candlestick formations can kind of lead to bad price action, and we really want to be avoiding that. We really want to be closing the weekly candle above 27.2k within the bull market support band. We don't want to be losing that bull market support band in the weekly candle, so we have 2 days to do that. Unfortunately, short term, in terms of hourly chart, 4 hourly chart, is not really showing us anything in particular. We just have to have hope here that that will occur, or at least cross our fingers that that will occur. So hopefully the bulls can do something. Now, there's actually not much clarity to be given on Bitcoin short term, as I just said. In terms of Ethereum, Ethereum doesn't look too bad, and Ethereum just sometimes reflects what Bitcoin is going to do. We've seen Ethereum foreshadow Bitcoin price action before. But unfortunately, Ethereum has broken down from a major yellow support line that it had, been holding since June 2022. We've broke that down, but right now, thankfully, we do actually have some sort of support coming from this red descending channel formation. We're on that channel support right now for like the 5th or 6th time being retested. Hopefully, we can see a bounce off of that, which will result in something for Bitcoin. We also do have RSI support on the daily chart. If we lose this for Ethereum, it becomes very unlikely that Bitcoin will see anything good. But as of right now, we, as I said before, we do want to see Bitcoin materialize some sort of bounce here, something good, because we're running out of time. We've got 2 days into the weekly candle, and we're kind of under pressure, we're under threat right here. There's a lot of danger going on for Bitcoin right now. So yeah, in conclusion, that's the video. We've got, a few things we need to see. As I said before, weekly chart is very important. 2 days into the weekly candle close. We've got those Bitcoin ranges we need to keep an eye on. And also, I just want to quickly mention again, the YouTube community post. Go ahead and post your questions there. Now we'll get into the outro. I've got Bitget and Bingx exchange I want you guys to take a look at. Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have two exchanges for you guys, two options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up, use my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video. Also, go ahead and check out the Crypto Academy's Become a Trader 10-unit course. If you want to learn how to trade, this is the way you can do so. Me and Megael Crypto have developed this course last year. We've got 140 students right now. All the information is about the course is on the website. You can check it all out. And ultimately, you can throw us an email at cryptoacademycourses@gmail.com, and we'll get back to you swiftly with payment information or answering any questions you might have in that email. So guys, thanks in advance for watching, or not really in advance, thanks for watching, I should say, and I'll catch you in the next video. Cheers.